Hi, everybody, and welcome to A plus Algos. In this video, I'm gonna talk a little bit about what an algo or market robot is, and also explain some of the terminology used in trading to better understand our products and the algo or the market robots. So let's start by just looking at what we have in front of us, which is a chart. This particular chart is called a candlestick chart, and it can actually look in many different ways. You can have it on the candlestick setting, or you can have it in different ways. Frequently used is actually just a line like this. And what this shows is the movement of price for a particular asset or instrument. Could be a stock. It could be, for example, Apple stock or Microsoft stock or any other stock. It can be the price of gold. It could be the price of oil or any other instrument or asset. And what the chart shows is just where the price is moving. If it's moving up or is it moving down, or in some instances, like this short period here, it actually didn't go anywhere. It kind of just moved sideways for a short period before it went further down. So a chart tells you or shows you what price is doing right now. And trading obviously is taking a bet essentially on if the price is going to go up or if the price is going to go down. So when you trade, you basically make a bet on, is the price of this asset going to go up or is it going to go down? And where does it go? Is it going up or is it going down? Who knows? That's the $1,000,000 question, right? If you knew where the market was going, it would be super easy. Everybody would be doing it, and you would get probably super rich. But nobody knows. So in trading, you use set of rules and other indicators to kind of help you make a decision on what position you are going to take. Position meaning, are you going to bet that the market is going up or that the market is going down? The price is going up or the price is going down? You can have many different ways of determining where you think the price is going. You can use indicators, you can use your experience, there's probably a million different ways to kind of try to determine where it's going to go next. But in trading, what you do is that you look at statistics and you try to figure out a way to help you with the help of indicators or experience or other tools. Try to help you out to make a decision on where the price is going to move next. So something you probably heard is also long and short position. Long position basically just means that you are betting on the price going up. Short position means that you are betting on the price going down. This means that you can actually make money no matter where the market is going or the price is going. You can actually make money when the price is going down, and you can also make money when the price is going up. So what an algo or market robot is basically a code. It's programming. It's a programmable code with predetermined settings and rules based on statistics or indicators or mathematics. And when these rules occur, the algo or the robot makes the decision to take a long or a short trade. You can definitely do this manually as well, which many traders does or they do. And we could actually try to just make a trade here to kind of show you also how the stop loss and take profit work as well. So let's, in this example, say that we have a set of rules, we have a set of technical indicators that we rely on, and when X, Y, and Z happens, it fulfills our rules, and we want to take a long trade because we think that the market is going to go up from here. To help you kind of dial in the risk, you usually use a stop loss, which is something that limits the downside, the potential loss if you are actually wrong in your prediction. And if you want, you can also use what's called a take profit, which is exactly the other way around. It makes sure that you secure some profits if the market is going where you think it's going to go. So let's see what happens if we set a stop loss and a take profit and we bet on the market going up. Now we have a live trade going on. So what this means is we set our stop loss at 50 points. It's also represented by the line down here. So if the market continues to go down and hit our stop loss, it means that the trade will cancel. And in this instance, we will lose 24, roughly 25 euros. If the market goes up, which is our prediction here, we have our take profit 70 points away, meaning that we will hopefully earn roughly 35 euros. And what a algorithm or market robot, it's the same thing, just different words for the same thing, does is pretty much do everything for you. Everything that I explained about looking at the chart, looking at the indicators, looking at the set of rules to determine if the price is going up or going down is what a algo does for you. And when this set of rules appear, the algo will make a decision to execute a trade, either going long or going short, also adding a stop loss and in some cases a take profit as well. Then obviously you can have a lot of different settings to both the algorithm and if you would trade manually. In this instance, we opened 0.5 of a contract. And a contract is also known as the size of your position. The size we put in here is obviously what makes up these numbers, making us lose 25 euros if it goes bad and making us earn 35 euros if it goes good. You can adjust the size. We could, for example, take a bigger size. Let's say we do 4 contracts and we look at the same stop loss. That means that we, if it goes bad, lose around 200 euros. And if it goes right, we earn 3,000 or 280 euros. So the size is very important and it plays a huge role in managing your risk when it comes to trading. Because obviously, depending on how much money you have, how big of an account you have, you might not want to take too much risk, because if you take too much risk and it doesn't go your way, then you end up losing all your money really fast. So these are the basics. I hope I covered the most important part and the terminology of some trading words or terminology like long and short and size, position and charts. And to kind of just wrap it up and summarize it, instead of you sitting manually looking at charts, doing all the research, looking at the indicators, doing all the testing to see if the indicators actually work, if they're good or bad in this instance, that is what the algorithm does for you. So it's a code that's been programmed to find statistically good opportunities to enter a position in the market, and it can enter positions both long and short depending on what situation you are in. So once you have installed your algo, it will do everything for you. You should always keep an eye on it, obviously, because as everything with technology, nothing works perfectly. You should always keep an eye on it, look how it's going, maybe adjust some settings if you feel the need for that. But algo trading is pretty stress-free since it gives you a lot of time to do other stuff you like while also being engaged in the market and trading as well. You don't have to do any maintenance on it. We obviously look over our algos. We see if there's room for improvement, and if we update an algo, we will send out the new update to you free of charge, obviously. But once it's up and running, the algo makes all the trading decisions for you. And that's pretty much what I would say is the advantage why it's so good to be involved in algo trading. As usual, if you have any questions or any recommendations, anything I might have missed in this video, please feel free to reach out to us. Send us an email at info@aplusalgos.com or use the contact sheet on our website, and just bring us all the feedback, and hopefully we can make better videos in the future. Thanks.